The S&P 500 is still sitting at very critical resistance, but overall the weekly charts are still looking very constructive. Today we'll look at weekly charts of all of the indices to figure out where the stock market is likely heading. So first up, let's take a look at a weekly chart of the SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so we are looking at weekly charts, so this is more of a macro level view, and we can see this week we closed with a very doji looking candle right around SPY levels of 412. Now just a quick reminder, we have very critical resistance on the weekly chart at the 50% retracement of the bear market, which is that critical resistance at SPY 414. That is going to be critical resistance because if we break through that resistance, we are likely going to push higher towards the August highs, which could take us as high as 430. Now keep in mind, we followed price action, which means we're not expecting SPY 430 until we start closing above 414. You never want to look too far ahead, and right now the only resistance that matters is the resistance we're currently at, which is 414. So while it's possible we go to 430, we are not looking for SPY 430 until price action breaks above critical resistance at 414. Now another thing I want you to pay attention to is we are now 4 weeks above the anchored volume weighted average price from the all-time highs, which means the average buyer of SPY is no longer underwater on their position. This is significant because that tells us we're entering bull market territory where people that are buying the dip and accumulating shares are now in the profit and they are no longer underwater in a bear market. This magenta colored line is anchored from the all-time highs, and this is the average volume weighted price, which tells us the average buyer of SPY based on the volume purchased at the prices it was purchased at is now in profit on their position, and this is a very significant sentiment shift. Today we will be talking a lot about sentiment because sentiment has a lot of psychology in how traders trade, and when traders are underwater on their positions or even investors, they are a lot more emotional and they are usually happy to get out at break even if they're underwater and they get the opportunity to sell for break even. So the reason it's critical that we're 4 weeks above the volume weighted average price is because we now have a sentiment shift because people buying into SPY are a lot more calm about their position because they're not underwater on it. So for that reason, SPY is going to have very critical support right there at that volume weighted average price at SPY 407 because that is a psychological level. If SPY breaks below that level, those traders may exit for a very small loss because they still do have the bear market in the rearview mirror, and they may get a little bit panicked if we close below 407, which could take us down to our next critical support down here at 400. So for that reason, on the weekly chart, there are only 2 critical support levels that I care about right now, and that is going to be 407 and then 400. As far as critical resistance goes, we're going to be looking at 414, and once we're above 414, we're likely off to the races to 420 and then 430. There's a lot of history behind those numbers, and if you zoom out, there's a very good chance those are going to be our next critical resistance levels. So now let's take a look at our technical indicators, and first up we'll look at the RSI, which we can see is still very constructive above 50, which tells us we still have bullish momentum. Our MACD is still positive on the histogram and still above 0, so we still have positive momentum from the MACD, and we still have this Bollinger Band squeeze, which is now growing in momentum as well, and we know that energy is eventually going to get released into the price action. So with positive momentum and a Bollinger Band squeeze and 4 weeks back over the average weighted volume by price, we can see there's still a very good chance the bulls are going to continue to push and try to break through that resistance. That doesn't guarantee they're going to be successful, so you still need to manage your risk around these critical support zones. You can also see that our weekly 50 moving average is very flat and it could be getting ready to turn up with a positive slope, and we still have our 20 period moving average above the 50. So this is still a very constructive bullish trend. We just need to get that next weekly higher high breakout above SPY 414. So next, let's take a quick look at the bear bull survey because there is a lot of psychology and a lot of sentiment shift in this market. And we just got done looking at the weekly chart of SPY, and we can see that there is a lot of bullish trending and a lot of bullish momentum. When you pair that with sentiment, you would expect that to mean there's quite a lot of people that are bullish on the market, but that is the exact opposite of what we see. The majority of people are still neutral, which likely means they're sitting in cash. And then the second highest majority are bearish, which means they're likely trying to short the market. So when you get a bullish chart and bearish or neutral sentiment, that actually increases the probability the bull trend will continue because there's still a lot of cash on the sidelines that can come into the market, and there's still a lot of short sellers in the market that will have to get squeezed out if we break through resistance. So with a bullish weekly chart and bearish and neutral sentiment, there is still a very good chance the market is still going to see that low volume melt up and continue to head higher. Next, we'll jump over to a weekly chart of the NASDAQ 100 Triple Qs ETF, and we can see the Triple Qs also have 4 weeks in a row back above the anchored volume weighted average price, which is anchored from the all-time high. So the average investor or trader that has been accumulating Triple Qs is now no longer underwater on that position. We have the weekly 20 period moving average moving over the 50, which is telling us a bullish crossover, and we have RSI above 50. We have the weekly Bollinger Band squeeze that has positive momentum and is now in the 3rd week in a row firing to the upside. And we have positive momentum in the MACD still trading above 0. So when you look at the major indices, that's the S&P 500 SPY ETF and the NASDAQ 100 Triple Qs, which represents the mega cap big tech companies like Apple and Microsoft. And you can see these stocks are looking very bullish because we have weekly higher lows and higher highs. So when we're talking about critical support zones on the Triple Qs, we're looking at the volume weighted average price, which is right here, right around 315. And then if we break that, we could get a little bit of panic selling back down to the previous weekly high right around 306. So critical support in the Triple Qs based on the weekly chart will be 315 and 306. And you can see based on our volume shelf, there has been a lot of accumulation around here in the 315 zone. This is no surprise with a bullish trend and a bullish chart and bullish price action that people are going to start buying in and adding to their position, especially when we're sitting right on top of the volume weighted average price. That means right now, if you buy the Triple Qs, you are getting the average price based on the entire bear market of last year. And that is still a very decent risk reward ratio. So you're going to see people still taking risk into this bull trend. Like I just showed you, we have bullish price action and bullish technicals that tell us we still have bullish momentum. And while that doesn't guarantee we go up each and every day and each and every week, we know the momentum in the path of least resistance is still higher prices. Next up, we'll take a look at a weekly chart of the Dow Jones DIA ETF, and we can see the Dow Jones is also 4 weeks above the volume weighted average price, and we are above all of the moving averages, and we're into this critical resistance zone right into the low 340s. So when we look at the Dow Jones, it was very strong last year coming off of the October lows, but it's really been going absolutely nowhere ever since, and it's really in this very large bull flagging pattern, which could now be starting to get a breakout. If we draw a very quick line from these highs, we could see that we're flirting with the idea of price action trying to break above this resistance, and we're currently sitting right on top of it, right around 338. So going into next week on the Dow Jones, we simply need to break above the 340s, which is the high of this trading range we're currently at, and then we'll likely see blue skies into the 350s, which means we will likely be retesting the old previous all-time highs. I know that probably sounds crazy, but that's what the chart is telling us, and we're only following what the chart is saying. We're not trying to make up any opinions or inject any of our bias into the chart. We're simply reading what the chart is already telling us. There is no doubt looking at this price action that it has been constructive over the last 3 to 4 weeks, and we're now sitting at a very critical resistance zone, which is going to be a very critical test. The RSI is above 50, the MACD is crossing back over to positive momentum and still above 0, and we still have this Bollinger Band squeeze, which is losing downside momentum and trying to roll over to the upside. So the Dow Jones could be the next index to start running here after this very long-term consolidation. We could be getting ready to break out and start running to higher prices. Looking at the volume shelf, we can see we have a lot of supply in this zone, but once we break through this supply, it is going to look like blue skies up to about at least 350. So remember, stay objective, and on the Dow Jones, you simply just need to manage your risk down here right around 332 to 334 because that is going to be a critical support zone. Jumping over to a weekly chart of the Russell 2000 IWM ETF, we could see a lot of relative weakness in the small caps because price action is still below all of the moving averages and our volume weighted average price. So in the small caps, we're definitely getting a different picture. Now keep in mind, the small caps are not the stock market, and the small caps are not required to rally for the rest of the indices to go higher. However, in a typical bull market, we will want to see everything rallying together, which means if we don't see the small caps joining the rally, we are very likely not going into a bull market. We are simply still in a counter trend rally within a larger bear market. So yes, it is important to pay attention to the small caps, even though they are not required to go higher for the rest of the market to go higher. So when we're looking at IWM, we're looking at critical resistance right here, right around 181, because if we break through that, you can see we'll chew through this volume shelf and we'll have blue skies to the low 190s into the high 180s, and that is likely where we're going to find resistance because that's also where the volume weighted average price is. Remember, I just talked about the psychology of that level because of people that are underwater on their position may be happy to sell for break even and get out before we go any lower. So that is definitely going to be an area of supply and a lot of strong resistance. So looking at the small caps, we're looking at critical resistance at 181 and then 191. And we're looking at critical support down here at the lows, which is right around 171 to 170. We can see weekly RSI is below 50, so we still have negative momentum. The weekly MACD is below 0, so we have negative momentum there. And our Bollinger Band squeeze is still trending to the lower direction, so we have no clear breakout for the bulls in the small caps. So if you want to stay bullish on this market, it's clearly not in the small caps until we can at least break that resistance at 181. And then quickly, we'll look at the VIX weekly chart and we can see the VIX is still trending lower week by week, trending down, and we're now trading down below 17. So this is definitely different behavior than we saw in the bear market. Remember, in a bear market, when we get low VIX levels, that means puts are a lot cheaper and bears are willing to take on those positions. But in a bull market, puts go on sale because the market is trending higher and nobody needs that insurance. So you can view the VIX however you want, but typically speaking, in a bull market, the VIX spending this much time below 20 is exactly what you're going to see. You're not going to see that in a bear market, so this is definitely different behavior. So if you still think this is a bear market, you need to be paying very close attention to the VIX because the VIX is telling us something different is likely happening. You could see negative price action in the VIX, negative momentum, and still trending lower, which tells us the VIX is still very suppressed, which tells us there's still very low fear. So let's jump back over to the S&P 500 and pull this all together. We can see very strong bullish momentum in the S&P 500, NASDAQ 100, and the Dow Jones, even though we still do have relative weakness in the small caps. We don't need the small caps to join the rally, but we would like to see everything rallying together, and we still have very strong bearish and neutral sentiment in what is considered a very powerful bull trend. Remember, these are weekly charts and these are weekly bull trends, especially when we're looking at the NASDAQ 100, and that is not something you want to ignore. It's still important to look at the daily charts day to day and follow what the price action is saying there. But the weekly charts are telling us we have a very strong market, which means we're likely going to continue to see that low volume melt up. This is 100% objective, just reading what the charts say. So if you don't agree with me, that's just fine. But right here, we follow the technicals, we follow the price action, and we follow the trend, and we let them do all the talking. If you want to come trade with other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community. I also have my own trade alert service called Bank Trade Alerts that will send you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You can find out how to join the Stocks Channel Discord or Bank Trade Alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.